What is up, investors? Back again, another stock analysis. If you enjoy these videos, please consider subscribing and hitting that like button. I'd really appreciate it. And leave me a comment down below. Questions, comments, disagree, agree. I'd love to hear from you. Today we're taking a look at Chipotle. Just covering this stock's going to make me hungry. And actually, this is a first for our channel. I don't think we've reviewed like a fast food or a fast casual one of these chains like a Shake Shack or McDonald's or anything like that. So Chipotle here, ticker symbol CMG, just reported earnings. I'm going to show them to you here. There was actually some interesting stuff here in the press release. I don't normally read through these press releases. It's just a bunch of investor fluff stuff they want you to read. But in the times we're in, there's actually some really like granular details you don't normally see in these things. So we'll talk about that in a second. But we see here in the after hours, the stock is selling off just a little bit, about 1%. This stock made a low down here at about $600, but it has rallied hard. And if you look at a lot of other restaurant stocks, maybe not the giants like a Burger King or a Domino's or a McDonald's, but a lot of them are still struggling. A lot of them are still closed or only doing takeout. Chipotle stock has been performing tremendously well since a lot of these stocks made their lows here. So let's jump into the earnings and see what's happening here. We saw in April, what they're doing is they're showing you, I'm going to get to the 3 months earnings report here in just a second. It's down here. But what I wanted to show you first was they actually broke it out per month. So in April, their sales were down 24%. That's a big drop. And then in May, down 7%. June, they actually went up 2%. And this is what I love about these press releases. That's why they're worth reading, at least right now. You know, July has improved to 6.4 month to date. So we're seeing that this company, as things start to reopen, I know we've got some stuff going on in Texas and Florida and California and things like that, but as things start to normalize, to me, what it's showing is Chipotle's business will come back. I don't think that's something we can say for every stock out there, but at least for Chipotle, their business is likely to come back. And I've eaten there. I certainly, as I'm covering this, I almost want to go get me a barbacoa taco. But let's jump into the 3 months ended here. We've got 19 here and 20. So this is really interesting. Let's see how the sales have held up. Again, we saw how dramatically revenue and sales declined for them. A lot of their stores might even be closed, or they're only doing takeout or delivery and things like that. But take a look. In 2019, they did 1.4 billion, and now they're almost flat, which I think you got to give them credit for. Obviously, a stock like this, normally investors are looking for increasing earnings, but in the times we're in right now, flat year over year earnings on a 3 month basis is actually pretty good. We see here all these expenses seem to remain in check until we get down to this other operating costs. And I have to imagine they had to put up maybe plexiglass screens. They had to buy face masks. They had to buy gloves. They had to like do more stuff down here. And so we can see this is 19% of their earnings, whereas it used to be only 13.5% in the period before. We get through here, we actually see G&A expenses actually went down. They were 8.5% of revenues. Now they're down to 7.5%, so that's positive. And we move through here, we see here total operating expenses were relatively flat. I mean, we declined in earnings, so typically maybe you'd like to see a similar thing happen here, but again, they're probably having to do some things that they normally wouldn't have to do in a normal time. We do have a loss from operations here. These are in thousands, so this is not a huge loss. Really nice $120 million win back here. So you can see if this company is able to get things back to normal, they are spitting out a fairly good income from operations. Get down to a net income basis, and this company is actually producing positive net income. Obviously, it is nowhere near where they were a year ago, but all things considered, Chipotle's holding up pretty well. We see here share count is staying relatively flat as well, which is important. You're not getting diluted rapidly. You guys that have bought Nikola stock and some of these other stocks, you're getting diluted every 3 weeks. Moderna is another one. They're really, really diluting you. Whereas Chipotle, obviously a much older company, much more mature company, is not diluting you. And as a shareholder, that is something you want to pay attention to. These are exactly what I went over, but just on a 6-month basis, we see revenues actually ticked up when you include some other months in here. Obviously, the first of the year here in the United States, a little bit more of a quote-unquote normal time. And we get down to a net income. We see net income slid in the 6 months. I think investors are going to give this company a pass on that kind of thing. From a balance sheet perspective, again, this is a company that's still generating a profit, so there is no need, I wouldn't say there's no need to worry, but there's a much less need to worry about a company like this than maybe like an airline or maybe some of the other food stocks that are out there that aren't doing nearly, especially like sit-down dining is probably not doing nearly as well as this. So cash and cash equivalents actually went up since the first of the year. Everything else here looks very much in line. Everything looks in line here from the total asset side. From the liability side, this is as squeaky clean as you can possibly get here. It's almost like they clean this with clean this like a dining room table. There's like no real debt here. Obviously, the biggest liability that this company has are these operating leases, but it is balanced out up here on the asset side as well. So man, this is a company from a balance sheet perspective looks really good. From a cash flow perspective, let's see what kind of cash, net cash by operating activities. Take a look. So we've got, this is 6 months ended in 19 and 20. And notice from a cash flow perspective, this company is actually beating last year in just barely. But from a cash flow perspective, everything is well within line for Chipotle. Now let's take a look at the valuation here. We've got a $33 billion valuation. That's a lot for a company that's, even in a good year, as we saw, even in a good year, this is a company that is going to do, let's times this number by 2. We'll give them credit for a little bit more than this, maybe $400 million in net income. And we've got a $33 billion, $33 billion market cap. We've got a PE ratio of close to 100. So, you've got to look down the road here with Chipotle. They've got to keep opening more doors, maybe new concepts, maybe different ways to make money, maybe have products, get them into the grocery stores, kind of like maybe what Starbucks has done. And I've seen McDonald's and Dunkin' brands have gotten into the grocery stores. Maybe Chipotle, they probably already have some things like that in the works or already happening, but maybe that's the next revenue driver for them, because I just don't know what's the next leg up for Chipotle to really make this valuation make a lot of sense. I think the other way to play that, if you don't want to have direct exposure to Chipotle Mexican Grill, there are lots of food and casual dining ETFs, exchange traded funds. Maybe find one that has decent exposure to Chipotle. Its share price is probably going to be way less than $1,100 or, almost close to $1,200 per share. And so inching into this via an ETF might be a better option, because if you're a small investor, $1,000 stocks, you get overweight very quickly when it's that high. So Chipotle Mexican Grill, not a stock I really would want to jump out and buy right now. We see it's really recovered. Here's my last point, and if you've made it through this video, this might be my most important point. I think this move right here that the stock has made has actually priced in a lot of the recovery already. Now, their numbers look fine to me. Their numbers actually look really good. Even on a 3-month basis, this is really impressive considering they've had, them and the restaurant industry in general has had come under a lot of pressure for a number of different reasons. But this looks really good to me, but I think investors have kind of priced this in already. And so when and if we start getting a recovery and everything starts going back to quote unquote normal, some of this might be priced in. So I'd like for this stock to kind of base out here, maybe at $900 to $1,000 before I really wanted to jump in here. We're way up here on a mountaintop. You know, if it pulled back down to the 750 range where it topped out previously, that might be kind of interesting because we see it topped out around that range here. And so that's a spot where there is some demand for shares. That's where I would be more excited. I definitely wouldn't be jumping up and down trying to buy shares at this elevated of a valuation, and still just quite a bit of uncertainty, especially in key markets like California, and I'm sure Texas and Florida are key markets for Chipotle. So there we go. Hopefully you guys enjoyed that. Again, hit that subscribe button. I'd love for you to do that, and that like button as well. Love to hear from you guys. Thank you for everybody leaving comments on my videos. I love to hear from you. I read them all, and I try to respond to as many as I possibly can. Thanks for watching, and good luck with your investments.